Hello everybody, hello live audience. Welcome to this course on managing the risk of corruption and fraud in your organisation. My name's Nigel Iyer and I hope you're going to enjoy this. We've got a live audience here, so you might hear a bit of shouting and murmuring and heckling in the background. Please feel free to join in from wherever you are. What we're going to cover is in three parts. We're going to demystify what corruption and fraud is. A lot of you might have read about it in the newspapers. You might have even read boring, dull books on compliance with rules and procedures. We're actually going to look at something different. How it's done, who does it, and why. Then we're going to turn to the business case for making money because you're losing it. Or should I say it more clearly, one of the best ways of making money is to stop losing it. And as the part three, how you can go about doing that. The real motto of this course is prevention is better than cure. Just like a regular health check with your doctor might save you surgery at a later date and a rather heavy bill. My background is years ago, while I wanted to be an artist, I ended up becoming a chartered accountant. I found it a very exciting profession, even though I wanted at that time to join the police to stop corruption. I found being an external auditor in one of the big 8 firms at the time extremely fascinating, because you could go into large companies, look through some of the details and find incredible things: offshore payments, bribes, kickbacks, overcharging. You could find all of that. The problem was, in the audit profession in the 80s, it wasn't popular for junior auditors to find that sort of stuff at their clients. As we saw with the Enron case, it was still not popular about 15 years later. So I left. After I qualified as a chartered accountant, I left, started working full-time investigating and preventing corruption and fraud in a large oil company. And after that, I became an investigator, traveling the world, quite remote places, investigating corruption, fraud in large corporations. And many people, maybe senior people, did lose their job as an effect of it. However, I noticed about 8 years ago that companies were spending a lot when they had a problem, but not enough to prevent the problem from occurring in the first place. And that really did lead me into a new world where fraud and corruption risk management was really all about awareness and prevention. If you're aware of the problem, you're keen to prevent it. Most companies are not as aware as they should be. Towards the end of my last few years, I've started writing. I've written a novel about corruption and fraud, and I'm writing film scripts, some of which you will be able to see in these versions of expert lectures. So let's carry on from what we talked about with film scripts. Many companies, they spend a lot of time on rules and regulations. They decide policies for their corporate responsibility, which includes anti-corruption. They decide about how they're going to avoid child labour. They produce beautiful-looking brochures. And at the same time, the finance guys and the board are looking at procedures for corporate governance, internal control. And these things have been developing over the last 20 years quite rapidly, usually triggered by a fraud and corruption scandal. For example, codes of conduct became very popular after the crash of BCCI. For example, after Enron, WorldCom, and many of the other things which were triggered possibly due to the crash of the US economy after 9/11, the Sarbanes-Oxley Act came into practice. And because of widespread bribery and corruption all over the world, the UN, with its arm called the UN Global Compact, set up a 10th principle of anti-corruption. And it's very funny that all the regulation, legislation, and guidelines, vast volumes of it, come into place after the events. Now, what is the regulation and legislation? It's paper. Paper and rules. And whether it be Maxwell in the old days, whether it be Madoff more recently, or MPs, pieces of paper and rule books do not stop people committing corruption and doing fraud. It just doesn't work. Rule books and guidelines tend to work quite well for the honest, diligent people, not the fraudsters or the people who have already turned to the dark side. And what we have to actually understand is, and this is my little prop for this lecture, is just remember this, that the dark side, as they said in the first Star Wars, is within each and every one of us. And we might actually do a little experiment on that a bit later on when you're feeling a bit more comfortable. So, there is another side of the coin, and we're going to take that little trip now as a journey to the dark side. And just remember, on the left-hand side, pieces of paper, rule books, do not stop determined criminals. Just like Neville Chamberlain said, I have a piece of paper, and he wasn't able to stop with that piece of paper Adolf Hitler invading Poland. So remember that. Rules and guidelines do not stop fraud. They are a safety net for the honest. What we need to go beyond compliance. We need to develop a mentality. We need to want to do it. And I find it very hard. People who give me lists of rules say you have to do this, you have to do that, you have to do this, you have to do the washing up. I'll do it. I'll comply, especially if it's my wife who tells me. But I have to, if somebody shows me why it's important, then I want to comply. So I don't think Neville Chamberlain really worked enough with Adolf Hitler's motivation. So already I'm going to ask you guys and ladies a question. The question's this, and no, Tom, I don't want you to answer now. I want you to wait. A typical company, please make up in your mind what you think is typical, has sales, turnover, of, and because some of you are in the European audience, we're doing this in euros, not that Britain's gone over to the euros yet, but we're doing this with a typical company of 100 million euros. And I want you to, each and every, and not to talk, Andy, with each other, to decide on your own. I want your personal meaning on this. I want to know what you think is the typical cost of corruption and fraud every year. And I've got those categories up, 0 to 100,000, 100,000 to 1 million, 1 million to 5 million, and greater than 5 million. And that, I want you to think on your own this time, please. So, what's the true extent of corruption and fraud? What do we mean? We mean anything that's deliberate and dishonest. Now, accountants and lawyers, they love writing long, long, long definitions that no one can understand. Let's just boil it, reduce it down to deliberate, dishonest. Now, deliberate's easy. I mean, it's quite easy. I think all of us have a pretty good opinion on what deliberate is. But because we're a mixture of ages and cultures in this audience, you might have a different opinion on what's dishonest. And just keep that opinion to yourself. I just want to see what you think. Definitely something which bypasses the rule books and the controls. It's kind of important to realize that, well, first of all, fraudsters do break rules, but also rules aren't perfect. The more rules you have, the more loopholes you tend to expose. Examples: overcharging, conflicts of interest, false claims, false expenses, exaggerated results, kickbacks, the theft. The list can go on forever. But the truth usually is hidden, rules are broken, and very important, when you think about the cost, it's not just the laptop that I just stole from you, Rachel. It's what was on that laptop, the information. The fact that you're going to have a nervous breakdown because you've got some private stuff that you haven't taken a backup. Yeah, you know you haven't taken a backup. And also, it's going to be the fact that you're going to suspect someone because you're in this room, we went for a tea break, and who took it? Well, it must be Tom because he looks like a criminal. So, so there we go. We're out there, we're suspecting people, we're causing noise, we're having to clear it up, we're going to have to bring in the police, maybe some expensive investigators. The indirect cost on the reputation of this place, the indirect cost on the culture, the fact that we've got after work to do, is much more than the value of that pretty cheap laptop you've got, actually. So depreciated value, we're looking at £500, yeah? Okay. So that's the true extent. And also remember another thing. Often when journalists, because they find it easy to focus on the individual inside the company when we're talking about a fraud scandal, well, remember there are many more people involved. I mean, let's just take some examples of expense claims, not naming any particular Houses of Parliament in the world at all. Who were really involved? Well, of course, the people who did it were involved, but what about the people who should have found it? In a way, they were involved as well because they got paid lovely salaries for not doing their jobs. Now, we move on to bigger things where we've got external suppliers or business partners. They're often reaping much bigger rewards than the poor employee. And you've got a whole chain of fraudsters. When organised criminals get in on the act, usually the internal guy is very lucky they get anything at all. Especially on some of the major bank frauds where internal people have facilitated transactions for external criminals, they have been lucky to be caught. Because when they fly over to Switzerland to meet the external criminals to get their 10%, they may never come back. And this has happened. So we've got to remember that the internal person is taking a really high risk for a fairly low reward, whereas the external parties, who are probably not going to get caught, because generally law enforcement, if they want to get the case solved quite quickly, they want a conviction. It's much easier to get the internal person because documentation's available, the person's personnel file is in the company, the records are there. The external people have gone. They're much harder to get. So they're taking a fairly low risk for an almost unlimited reward. And if we remember that external people usually put on the pressure on internal people to commit fraud with the possible exemption of senior management, and we'll look at their motivation later, then I just want you to bear in mind. So what you're doing is, when you're answering this question, is you're thinking deliberate, dishonest. The total cost, indirect and direct, fraud and corruption done by anybody, insiders, outsiders, of which there are lots, and in collusion, which is always the most dangerous. So I'm going to ask this answer. We've got about 20 people in the room. I'm going to ask you to take 30 seconds while I grab a sip of water to tell me, what do you think is the total cost of fraud? And we're going to race through those 4 categories. And those of you who are watching this, I'd like you to do the same. So I'll just grab my water. And okay. So without talking amongst yourselves, how many people think the total cost is between, per annum, is between 0 to 100,000? Okay, usually there's one. Interesting. So there's one here today. So let's look at those of you, any takers for 100,000 to 1 million?
Yeah, I think that one.
Okay, one more. Okay, 1 million to 5 million, and this is what you think, not the statistics and all that?
I reckon it's more than that.
Okay, but how many of you think it's 1 million to 5 million? That's about 60, about 16 of you, and anyone who thinks it's greater than 5?
Yeah, I do.
2 of you, that's interesting. Have you, Andy, have you been defrauded?
Not saying.
I think you give that one away. Interesting. But there's always a few cynical, paranoid people in the audience who do believe the cost of fraud. But what are we actually saying when we say the cost of fraud is? Let's go with the majority, 1 to 5 million. Now, many studies have been done on the cost of fraud. The Association of Certified Fraud Examiners, who do have a vested interest in some way, have done quite a large survey in corporate America. They're putting it around 7% of turnover. And I would say that in my experience, personal experience, in a normal functioning company, the majority of you are right, but those of you who probably had a different experience are looking at over 5 million. Fair enough, you must be right too. But if we go 1.1, we go with the majority, 1 to 5 million, let's just do a simple average of that, and let's just say it was 3% of turnover. And let's just see what sort of effect that has on a company's profit and loss account. Let's take a standard company with sales of 1,000, costs of 950, profits of 50, and a profit margin of 5%. What are we saying if the cost of fraud and corruption was 3% per year? Now, it doesn't appear in any particular one account, so let's just say it does have an effect on cost. So, if magically our organisation was able to say, we found the formula, we found the magic medicine, we can be fraud and corruption free. What does it do to the profit and loss account? Well, it reduces costs to 920. It increases profits to 80. And it increases profit margins to 8%. Now, an analyst on Wall Street or in London who writes about companies based on their profits and trends will actually say this company has increased profits by 60% from last year to this year. How did they do it? And the secret formula is we actually looked at the cost of fraud, we looked at where it was happening, and we managed to push it out of the business. Utopia, hey? Best way of making money is to stop losing it. Now, interestingly enough, I tried out this argument at a business school, one of the top business schools in Europe. I went to the dean and I finally got an appointment, and he had an office almost as big as this room. And it was the messiest office I've ever seen in my life. It was shelves everywhere, paper everywhere. And he said, okay, I'll give you 10 minutes. Why are you here to see me? And I said, well, what's the subject that is your core subject? And he said, risk management. So I said, that's really interesting. Would you be able to tell me the 5 books? This is an executive MBA. This is top executives coming in for 6 weeks a year, paying a lot of money. Could you tell me what are the 5 books on risk management you would recommend to senior executives to read? And he was kind of compliant with me for this because it still hadn't run his 10 minutes. And he pulled the books off his shelf. One of them was written by him. And they were all in English. And I went to the back of the book, it's not the book, and I flicked through the index pages, and we looked for lying, cheating, stealing, fraud, corruption, embezzlement, swindling. None of those words were in the index pages. And the funny thing is, he said, what are you trying to prove? I said, what you're doing is you're teaching risk management, and you're probably ignoring the greatest unmanaged risk. And he said, well, I don't know what you really mean. What do you really mean? So I went to his desk, and on his desk were several newspapers. Here are 2. These aren't the ones I picked from his desk. These are actually from just a few days ago. And inside these international newspapers, the Financial Times and Herald Tribune, inside these ones, there was 1 article of fraud and corruption on one of them, on the front page. There were 2 on the other one. And there were 6 about why companies were suffering or collapsing because of lying, cheating, swindling, fraud, corruption, unethical business behavior. At that point, the penny dropped, and he said, so we sit in our ivory tower and we ignore the reality. And I said, well, you've got one get-off clause because fraud and corruption probably isn't a risk, it's a certainty. But if the risk manager ever went to the insurance company to say, can you insure me on our fraud and corruption risk? And he said, well, how would you measure it? Well, it's 3% of our turnover. He said, that's not insurable. So it suits the insurance companies when they insure against fraud and corruption risks not to know the true picture.